Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video, I would like to talk about the global market. We have a lot of things happening. So I'm going to make a focus on the SPY ETF, which is the tracker of the S&P 500. Let's get into it. Alright guys, so I'm not making a lot of analysis on the SPY, but actually I always talk about it on my Discord. It's something I always keep an eye on because it's the global market. This is telling you what is going to happen on the other stocks. Are the breakouts going to be successful or not? It brings you a lot of information. So I always analyze this index, and I want to share more this analysis with you guys on YouTube because I think that we are in a period where it's important to keep an eye on this and not just trade blindly. So I use Elliott wave theory, I use breakouts, I use divergences. So this is what we are going to see here. I'm just going to analyze the move since 2020. So here I'm going to break down this move into 5 waves on the upside. So 1, 2, right? We are in the third. The fourth is coming. All right. So I think the fourth is actually, we are in the fourth wave right now. I'm going to analyze this very soon. We're going to have a fourth wave that I'm going to tell you, I think, where it might bottom. And then we're going to have a fifth wave. That same thing I'm going to tell you where I think it might go. So first, Elliott wave theory applied. We just check quickly, guys, that, you know, the waves are, the wave counting is good. 1, 2, 3, 4, 5. Okay. That works. All right, here 1, 2, 3, 4, 5. That works, and we are in the fifth of the third. So we completed that. All right, I was not sure if the fifth was going there or not. Okay, I was sending alerts on my Discord saying that around 480, 490, it is a level to sell the S&P 500. I personally missed this trade around these levels, but I got in around 472. Something like this, and I increased my position 2 days ago to a short position because I have stocks, of course, and I want to be protected for what is coming. So what is telling us that the situation is shifting? The first thing, let's quickly, so it seems that we are in the third wave and that the third wave is complete, but let's be honest, Elliott wave theory by itself is very hard to find the right counting at the first try. So we associate that with divergences. So here we can see, for example, at the end, the market making higher highs, the RSI going lower. Let me add the MACD guys here. Same thing, MACD making lower highs. All right, market making high highs, MACD making low highs. The market is out of steam. Bulls are tired. Let's quickly have a look at the volume. Usually volume are decreasing in this periods. Here it was not obvious, guys. Not obvious at all. The volume were stable, so we didn't have the information coming from the volume, but we had the information coming from the momentum. Then another thing, you guys are used to, maybe to use bullish regular divergences, but another one that is very useful, and here I can see it right away, it's not here, is the hidden divergence. All right, so hidden divergences occur whenever the market is in an uptrend and the momentum is making lower. So the market is making higher lows and the momentum is making lower lows, so that it takes energy. All right, so you have this kind of shape with the momentum that is decreasing. Okay, and the market is making higher highs. So at the beginning you don't have the bearish divergence, so we have a mega fan pattern. I'm just going to keep the MACD, guys. It's easier, and you can see the MACD in a healthy trend is actually developing into a mega fan pattern. All right, as you guys can see here. So when you have this mega fan pattern in the trend, you know that the trend is strong because you don't have bearish divergences, and healthy. Whenever you don't have this anymore. So here we had it until here. All right, and you can see that this trend line. Okay, so I'm connecting this low here. So when I was here, the market was making higher lows and the MACD was making lower lows. But so we were rebuilding energy starting from here. Sorry, bam. And when we arrive here again on this trend line, you can see that here the market didn't have time to go lower. The momentum didn't have time to go lower with a market that is coming on the trend line. All right. So this was the first signal that this trend line might break. Okay. And it's the signal to me that we are starting the fourth corrective wave. The second corrective wave was a flat as you can see here, A, B, C in September and October, November 20. So we can expect a zigzag, because usually when you have a flat in the second wave, you have a zigzag in the fourth wave. That's a rule that Elliott had identified a long time ago already. So I think we're in the A wave of this zigzag. So once again, then you can see here the MACD was making a mega front pattern, and then suddenly it converges. So this is a momentum bearish signal. So momentum bearish signal, breakout, and Elliott wave suggesting that we might be done with the third wave. So I have a lot of information that actually, and the rates are increasing. You guys are aware of that. The 10-year is going really higher, guys. US 10-year. You can have a look at that. Okay, so, okay, we are correcting a bit. But this rally of the 10-year is suggesting that the inflation is here, all right? It's showing you that traders are pricing inflation, and so the Fed is talking in 5 days, so let's see what Jerome Powell has to say. But most likely, you know, his rate policy is not going to slow. The rate hike policy is not going to slow. So this is what the market is fearing. All right. So the question is, so we are in a correction, guys. Okay. And it's probably going to last. It's been already 1 month. So maybe 1 more month, maybe 2 more months, maybe 3 more months. You know, I think something like this. I would say 2-3 months. So we're probably going to have an ABC. The question is the A wave complete? So let's find some supports. So as you guys know, whenever we have a correction, it usually goes to the top of the third or bottom of the fourth. So let's check of the preceding wave counting. So let's check here. Third wave is here, guys. Fourth wave is at 420. So either we go to 450 or to 420. We broke 450 yesterday, and it was too close from the breakout of this trend line. So my take, and let's do some fibs. Okay. And you see the 38.2. Usually we correct at least to the 38.2. Otherwise it's not really a correction. All right. Sometimes it goes to the 23.6 in very strong bull markets, but I think we're not anymore in a very strong bull market for the past 6 months already. And so my take is that we go to 420. So the question is, are we going to do it right away for the A wave and then even maybe go deeper or maybe do a flat? Or are we going to go a little bit lower for the A wave, correct, and then C wave? I think the second scenario is the most likely one. We have the 200-day moving average coming at 440. So I think we might just find some support at this moving average, maybe bounce a little bit. But then, guys, here it would be the time to take profits on, I think, many stocks. If you have some, I would personally do that, because then we have the C wave coming, all right? The C wave might end in April, something like this. And depending on the A wave, we're going to analyze the C wave. Today is too early to say. And then the good thing about that is that this is only a fourth wave, guys. So we're going to have a massive rally starting maybe in June 22, you know. So we have 6 months where I think we need to be cautious, we need to be careful. Bitcoin is going to follow. I'm going to do another video on Bitcoin. So that's it for the SPY. I hope you guys enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.